Go ahead and start that now. Let's get back into the stream. Use this for my YouTube. I have to. I need to close out some applications because my MacBook's actually like going slow. All right, that cleaned it up because I have DaVinci Resolve open. Figma. Maps. Okay. Let's go ahead and answer some questions. So, first one, I have a question. If we have a C2 closure to the upside, but C3 goes over the EQ and CSD to the upside, can we trade the candle for expansion? So this is a question for Gwen. So let's go over it. Let me see if I can find a quick example for you where that does occur. Maybe. So here would be an example. That's not going to be a great one. Just give me a minute. I want to find one that's a reversal candle followed by a reversal candle because it's kind of what I want to teach in this moment. I just don't have one on hand. So it is a bit annoying. We could do something like that, maybe. Let's go in here. So here we have a candle 2 closure, right? Right here. And my laptop's lagging a decent bit. And so if we go down to the 5 minute, go down here, go to the 5 minute, do we have everything we need for a setup? Well, you can see we have that change in the state of delivery because we find the low, we find the series of candles that made it. Did it close through? It did. So then now it's valid to look for entries in this next one. So ideally, we want to see 0.5 of this candle or 0.5 of the wick, relatively the same in this instance. Respect, right? Now, price can go lower, right? But what it means is if we're expecting an expansion candle, right? So for price to have a shallow wick and expand higher throughout the duration of this period, we want to see that shallow wick and then let it expand. Price can go deeper into this area and still reverse. It's just less likely to expand because one, this takes more time to go lower, as well as it takes more range, right? So does it take more effort for the market to go here, all the way down here, all the way up there in 1 hour, or there to there in 1 hour? You see the difference? So as we watch this play out, we have these equal lows, they get swept out, right? Yes, it's below 0.5 there, right? Or right around 0.5. Does that mean it fails or it's an invalid setup? No, it just means that if it's likely to expand, this could be more of a reversal candle or a consolidation. And then candle 4 is sometimes more likely to expand, right? So we see how it's kind of hanging around here. That's when generally the 1400 would expand. Let's see. Right, so then we get this continuation, and then that gives us the new range. It wants to go. Didn't really do much. Does that make sense? It doesn't mean that it won't reverse or that it's not valid. It's just that if we dig deep into here, we're using all this time in this range to go here versus making a shallow wick and then going. Does that make sense? Go back into the live stream. Most likely they are not in the chat, so I will just continue through the questions. Could you go over New York Open on indices today? Sure. So I personally didn't watch just because it's not that interesting to me, right? We have a swing here. This is valid, right? This is our intra-candle change in the state of delivery on the monthly and daily time frame, right? To trade it higher. We expand and you see candle 2, 3, 4, 5, 6, 7, 8, 9, right? So from this low, it's 9 candles. Yes, we technically have a candle 2 closure here on both sides. So it's like we've taken out both sides of the range. Right, we've taken out this side, and we've also taken out this side. Right, does that make sense? So here it's just, this is more so of a consolidation signature to me. We have expansion. Are we retracing or reversing? No, we're just consolidating. So that's generally what I want to avoid. The only way you could have framed this for me is looking at NQ. If you want to frame it back into the range, because Monday, Tuesday, Wednesday, we all expanded higher. I don't really want to trade on Friday higher with that. So I want to trade back into the range. So that means I would use the previous day high as a reversal point. So here on Thursday. So we don't have anything there, but if we go to ES, we do trade over that high. So we have an SMT. So then that would allow you to look lower, right? Because we have an SMT there. And then from there, you'd want to see a candle 2 closure or a candle 3 closure, right? Because we have SMT on this high. And so if we're looking around 8 a.m., right in here, and I think quite a few people got faked out on this, which is fine, right? You go in here. This is a valid closure. We have SMT, sweeps the high, nice closure through. So that's an ideal candle 2 closure, right? Because it closed below there. So then you'd want to see 0.5 of this be respected, 0.5 of this be respected, trade it lower, right? So we could go to the 5 minute, use this. You'll see this opens up as a bearish setup. Now, what do we want to see, or what do we notice? Who can answer maybe the one thing here that we can notice from avoiding taking an entry right here? See, low taken, yeah. So the low is already taken. So if this was our first target, we can expect what? A new phase of price. So what do we want to see? Is this going to be a reversal to trade it back higher? Is it going to be a retracement to continue lower? Or is it going to consolidate? So that's when I let more candles play out. Right now, it's looking like a retracement or a reversal. Okay, so now I have to wait. Do we have a point of interest? Our first point of interest is up in here. And this is another example of, right? I don't know why it's lagging like that. If we are going to, form a retracement, we want to see it into this point of interest. It can trade higher into here. It's just unlikely to really expand, right? We're not really expecting it to go here, there, all the way down there, right? We'd expect there, hang around, then the next candle. We can wait and see. Right there, there's nothing bearish in here to get on side, and now we've swept out the high, right? I think that's where we have another SMT. So then you could wait. And then here we'll print a new one, right? And then here, what do we notice? Once again, we have taken out this low. So we don't really want to get on side right away with that because we have taken out the low. So if this is going to hold, we want to see, what is this? Consolidation, retracement, reversal. I'd say that's a consolidation. So then marking out the high in the consolidation, if we're going to trade it lower, we take it out. Okay, technically could get on side with that, do these lows. It's just, let's talk about this. Is this a very convincing run? It moves lower first, takes out all this, takes out all that. If it would have just swept and then closed below here, I'd want to see this next candle go. Right now, we're kind of struggling, right? You see all the long wicks on the lower side. So this would be a possible entry. I'm not a huge fan. I would probably miss it if it goes. Okay, it sweeps out. Fine. And now, if we take a look, maybe at the 3 minute will show better. There's a consolidation. We sweep the high in the consolidation. Let's see if we start to trade this lower. There we start to trade it lower. So now I'd expect this to expand lower here in the next 30 minutes. If we are going to go lower. Yeah. And then we took out session lows. Yep, session lows taken. Not sure if we took this low or not. That's normally what you would want to see. Obviously, previous day low is the target in this case, but it's always important to note these session lows, right? We're taking out London and Asia lows, right? So that's our consolidation. So if we come back to this, this is an area where you either position, or if you're in here and you're holding for this, don't let this turn into a losing trade. I don't know what is going on with my here. It's not lagging. Good. But does that make sense? Why not take the first chance for entry? So that's why I talk about the intra-candle change in the stage delivery. It's because a lot of my losses always came from trying to take this first entry. So I like to wait for the continuation. That makes sense. Put out a few more applications. Okay. I'm in after the first sweep of the consolidation. Oh, you could take that. I was saying you can. It's just for me. So he's talking about why not take this. I was talking about it, but it's like that's a very shallow sweep. Like you see, it's just barely sweeping it. And then you look at the reaction. If you sweep at a high, you want to see aggressive up and then just starting to fall. This is aggressive up, aggressive down, aggressive back up, aggressive down, aggressive back up. It's just still consolidating at this point. Right, so if you go find an example of when we sweep a consolidation, we just aggressive up and then back down. You see kind of here, right? Aggressive up and then back down. See how it just falls? That's more of what you want to see versus a struggle to get below this level. You were looking for the low that you mentioned? Yeah, I mean, it's a logical thing to do to look for previous day low. The one thing you can look at though is we sweep out all those lows, and then what does this tell you? That's either a retracement or a reversal. And that's pretty aggressive back into the range, right? It's coming back into this range. So now we have, whoa, there's a bee literally on me. Okay. Right, so now we have consolidation, aggressive down, back into this range, which then you could see that. I don't know what happens because my Wi-Fi was out. That is pretty painful, but yeah, it does take it. Yeah, I mean, it's a valid, it's just that's why I was pointing it out. It's just very shallow. So it's just more of an actual consolidation. That's why I was trying to go to the 3 minutes so you can see. See how we sweep this? And then we're just struggling to go lower. So it's like, even if I got onside in here, it's like struggling. It's like I could get out there or I just get stopped out, right? It's fine. You see how it's just not a convincing run right there. Right, you see how this sweep is at least a few points. Yeah, I closed after the M3 CSD back to the high. Expansion met with expansion. Yeah, that's solid. If YM or ES would take the lows, would you TP? Yeah, for sure. It's a good way to TP. I don't watch YM, but if ES took the lows, yeah. All right, let me get to the other questions people left. And then I'll get into all the questions in here. Once in a trade, let's say you're long and got a C2 closure, got into 3 continuation, you see it's a market maker buy model. Would you then validate the trade idea that you should be targeting the original consolidation? So my model essentially has that all built in without having to think about it. So for instance, we go back to here. It's gonna already do it here. So you'll notice, this is kind of what you're talking about, is, okay, should we be targeting the original consolidation? Well, my model already does that where it's just saying, hey, we're gonna look at these higher time frames. So if we're on the 5 minute, we're looking on the hour. We just wanna mark out these highs, right? So this one already got taken, right? But this one hasn't, so I mark that out, and that's my target, which is just the original consolidation. So you don't have to really think about it. No need to overcomplicate it. Does the formation of a bearish OB invalidate bullish order flow higher time frame narrative? I'm going to take a photo of this because I don't consider this a bearish order block. So right here, let's go back to talking about this. This is obviously very bullish, right? So he's saying, does this invalidate bearish order flow? And no. It maybe would if, we have an aggressive move up and then back down. Sure, but what is this? This is once again just consolidation. It's just consolidating here. I don't consider this little slow reversal here as a change in the state of delivery, because like I don't, this high, like if you were saying, hey, I'm going to short off this high, I just don't trust that. Like if you trust that, I don't know, I guess you can. I just personally can't. So versus, you know, let's say we have, let's find some order. Maybe the hourly. I'm trying to find a decent example. We can do this, for example. Right, like if you see a very nice V-shaped reversal, then you could consider it. This one's a bit tough because normally you want to see this first, then that. It goes the other way, so that's more bullish. Let me find one for you. Because it has a particular look to it. And it's been kind of garbage lately. I can spot one. I think right there. Not amazing, but it will do. Right, so you see the difference in something like this. It's not amazing, but we'll go down to the 30 and then it will become a lot more clear because that wick will turn into up close candles and then down close. So you see how here we have that aggressive up and then aggressive back down. You see that's a lot different than something like this, where it's just bring it back. See how that's a lot different? A nice V-shaped reversal looking versus in my face. Versus that consolidation. So that's what I would talk about with that, but it doesn't invalidate the structure, right? It's more so about what time frame you're on. Because if you're bullish on the daily time frame, just go back to where we are currently. It's like we're very bullish in here, right? This is very bullish price action. It's like even when you go down to the lower time frames here, you're gonna have stuff that is a reversal, right? Like this is a reversal in a lower time frame, right? Like that's a nice move. You can trade back lower. But does that invalidate the bullish structure? No. Right? Does this invalidate it? No, because it's consolidation, sweeps the low. Right? So for me, it's more about the phases of price. Right? Because if I'm bullish, I'm viewing this as a retracement. Right? If it goes and drops through, then that's expansion met with expansion. No audio. Let's see. Yeah. All right, can you guys hear me now? Back? I think it's because it just got super windy. Let me turn my back. All right. Should be able to hear me now. Yeah? Hopefully. Can someone say yes? All right, it's fine for you? Okay, cool. Then we will begin again. No voice? Some people have voice, some don't. Let me pause my... All right, we are back. Let's continue. Let's go through some questions. I don't know where we left off. Lost the audio. Thank you, Day Trading Realtor, for the text message. It's the only reason I knew that there was no audio. So, we already went over NQ, trading daily bias and using hourly for entries. I understand the structure well, but struggle with timing. Often see valid setups formed during Asia way before London, New York opens. Can you take these entries off? They line with bias. Yeah, you definitely can. The one thing to consider if you're taking Asia entries, we'll just go back to silver as a good example. You know, if I'm trying to take an Asia entry, long or short, right? Mainly what I want to do is have a invalidation based off the hourly, right? So I just use this as an example because it's a very clean setup. But we have a candle 2 closure. I'm expecting this area to hold. We have a candle 2 closure form during Asia here. So it's like if I want to take that, I can go to the lower time frames, but I generally want to use that as my setup, my stop loss, I mean, because the whole goal is if you're taking a trade in Asia, you're expecting it to form a high a day, open high, and then hold this high until it goes lower, right? So something like that, or using the change in the state delivery. So either of those are valid if you're trading in Asia. What I wouldn't do is get sucked in too low, because then what happens is, it gets a bit messy in here and you can get confused, right? So in here, if you're waiting for that intra-candle change in the state delivery, you could also use that as well, right? And sure, use that. But if you understand it, you can just put your stop on the high if you're holding for that higher time frame range. Let me double check that I have audio. We'll sell T's number for 1 million. Yeah, I would have to get a new number. That would suck. All right, let me go back to the questions that people left. Can you explain how to effectively use DXY alongside EUGU when trying to frame a bias and build a trade idea? Let's say I've got the charts for DXY, Euro, and GBP open in front of me. Now what's the right sequence to logically follow? Do I start by analyzing DXY to see if it's bullish or bearish and then lean the opposite way on EUGU? That is one way to do it. Or do I look at EU and GU individually first, then check DXY as more confluence? So you can kind of go either way. I personally just, I know people that go to DXY. We'll do this. So what they'll do, they'll go to DXY. Nice. And they'll analyze on here. So let's say, hey, I am bearish to this low, something like that. Then they will look for Euro longs or GBP longs, right? Because they are bearish on dollar, right? A lot of times what I like to do is just look at Euro USD by itself and then use the analysis and then reference DXY for SMT, right? Now, if you don't know which to decide between, let's see if that was in your question. If you want to determine relative strength or weakness before them, just compare Euro and GBP together, right? So how do you use this? Well, if you have Euro over GBP, right? If this is going up, it means that the Euro is stronger. If this is going down, it means that GBP is stronger, right? So if it's currently in a bearish trend, it means that GBP is stronger than Euro. So if we go to GBP USD, that's going to be more bullish, right, than Euro USD, which is more bearish, right? So if I want to short Euro, then I want to be shorting Euro. If I want to long pound, right? So that's how I would use Euro GBP to determine relative strength and weakness, right? So if this is up, I want to then focus on longs for Euro. It's like if my bias is long, I want to be focused on Euro. If my bias is short, I want to be focusing on GBP. If it is bearish, that means that the Euro is weaker, the pound is stronger. So if I want to long, I want to focus on GBP. If I want to short, I want to focus on Euro, right? So that is how I would do it, is mainly just look at Euro and GBP, see if there's daily setups that make sense, use DXY for SMT, and then just double check that you have a stronger or weaker asset. I don't trade Forex though, so that is that. How many trades do you get in a month? All the assets. Mainly it's 0 to 4 a week. This last month, barely any. Just been busy traveling in the markets, just haven't been as clear for me. Do you use SMT extensively as Kane and Garrett? I do not as much. I don't use it as much. No, I don't. I'll split it with you. If you can give away my number for $1 million, yeah. I'll just get a new number and take him 500K. That'd be sick. Okay, let's go through here. Went through that. Could you show some examples of how to effectively use EQ? Yeah, we can go over that. So the main thing for EQ is you're either going to respect it or not, right? So if we are in a bearish trend, we'll just use this for example, right? For example here, if we're going to go run out this low after a sweep of this high, we're going to respect the EQ of the wick. We do. We're going to respect the EQ of the previous candle. We do, and we run this out. So now in this next candle, where's our EQ? Could use 0.5 of the wick here. Do we respect it to trade higher, or do we not respect it and then go take out this low, right? Okay, we currently respected it, so that would possibly be, some sort of bullish setup could be framed there, which it was, right? And then we take a look. Okay, now we kind of swept out this previous day high, closed back in. It's technically a candle 2 closure bearish, so not much going on here. I just would use 0.5 of this wick, see if it goes lower. Okay, sweeps it out, right? So it's a bit messy in here. That one wouldn't have worked. Cool. Here we have a whole candle. Mark out 0.5. Are we going to respect this to continue lower, or are we going to disrespect it to trade back higher? Respect, continue lower. Then you just repeat over and over, right? So this is the concept in itself, right? Now that's when you pair it with closures and other biases, right? So other annotations, right? So I'm not just saying on the daily time frame, hey, I'm only bearish because of this. I'm bearish because we just swept out this high. We engulfed this whole candle, right? So if I'm expecting to still be bearish, I can have this. Then I can go down to the lower time frame here, and I say, okay, what do I have around this EQ area? Well, I have this fair value gap. And then that's when I look for my fractal model in there, which we have a candle 3 closure there. So if we go down here, let the setup print. Right. There we have this. Let's see if we can get on side. We don't know what it looks like. If I just want to enter, I could just sell this right here. And I'd put my stop on the protected high. This would be a positional entry because I have an invalidation relatively close to my entry. Or I could look to wait for what? I want to see price sweep out this high and then go. Right? So let's see what happens. Oh, there's the sweep. And I could look to get short again. Cool. And then go. And get stopped out with a little fake. And then I could try to get back in again. One more attempt. We got to make back our dollar. Right? So get faked out a little in there. And that was actually what I was just talking about earlier. Very shallow sweep. But trying to speed run it. You guys get the point? Check the chat. Yeah, all streams are recorded. They're all put into the WAP. TradeZella added the indicator. Yeah, they texted me. I got the indicator put in there, and they said they added it, so that it should just be higher time frame candles or something like that. I can take a quick look. Let me go to my contact with them. Yeah, it's just HTF. So I'll go run through that and see if they need to make any adjustments, but I had that made specifically for us in TradeZilla. Could you explain how you define... Wait, let me get to the other questions really quick. The people that left them. Sometimes I can form a bias on the 4-hour daily in both directions. Well, first off, before I continue with this question, if you can do that, that usually means that you don't have a very one-sided bias, and you should avoid. The initial bias is my pre-market analysis, then price starts to develop a bias to the other direction. How do I mitigate this? So the easiest way to do it, most simple way, is you go into the day with a bias, either bearish or bullish, and you only look for setups in that direction. The more advanced way is you're looking for setups in that direction. If it fails, you either avoid, or if it fails and is a proper invalidation setup, you can trade it the other way. But I would just most likely avoid. So yes, stick to your initial bias. Okay, now I can go back to the stream. Let's go hit these questions. I'm hiding from the wind. How much is the mini Starlink? Because I'll actually buy one. Is this? It's like I'm at like 15 megabytes per second or something. It's actually horrendous. And my battery is at 17%. So since I'm not inside, we'll see how far we can make it. If I have a bullish bias and price disrespects bullish OBs, the order flow can still be viewed as bullish unless there's a V-shaped reversal to the downside. Yeah, and the main thing is, right? Let's say, we have price here and then we have something like this, right? And we're respecting this order flow in here, right? A lot of times what will happen is we get something that looks like a structure shift to the downside, right? Or some sort of change in state delivery, right? And people are trying to shorten this and then they get caught in this long. And usually that occurs when we take out a high here. So you go, takes the high, it retraces to take out some liquidity, form a new swing, right? So why do people get caught in this? Because they're trying to pattern trade just the model and they're trying to catch this move here versus seeing the higher time frames and seeing it's still bullish, right? So that's why I don't ever try to just catch the highs, right? I'm just always going to trade the continuation because I've gotten destroyed enough times trying to catch highs and lows in the market. To explain how I define dealing ranges and swing highs and lows in terms of time frame. I don't really like dealing ranges is just a simple. I don't really use it that much other than it's just kind of a natural thing that I do without thinking about it. So I'm like, if we're trading in here, right? I'm just looking to the left. What range are we in? Okay, well, we're here and here. So that would be my high and low for that, right? But I don't even really use that. I mainly just focus on the last few days of price action and saying, hey, where are we trading, right? Where are we in this range? But I don't really use it like everyone where they're saying, hey, I need a high and a low. I need to wait for a retracement into a premium to sell. Oh, audio's again. Audio gone again. All right, we are back. What I was trying to say is I don't really use discounted premium in the terms of, hey, I need to wait for a premium to sell this or anything. I'm just more so using the phases of price. So I'm seeing it expansion, viewing this as either a consolidation or as a retracement to go lower. So like this would be a valid date to short for me, right? So I don't really use it how other people do. So it's not really a big part of my model. The only way I kind of do use it is, let's go to this hourly. Since this is technically a bearish setup here. Like the one way I will use it is this swing point here, right? This reversal, it marks out the low. So what I can do is mark out from this high to this low. And ideally I want to be catching my short in the high of this range. Or above 50%, right? But that's just something that comes natural. Like I don't really think about it. And I don't really have defined rules for it. So that's why I don't talk about it. Because like, will I not take a short right here? No, I would take a short right there. I don't care. Right? But it's something that I just think about. But it makes sense, right? You don't have to do it to talk about that. You just look here and you say, okay, do I want to be shorting right here with this low? No, I want to be shorting up somewhere up here into the lows. And it's gone again, the Wi-Fi or the audio. It's good. It's only gone for some people. You just texted me it's gone. Oh, that was 2 minutes ago. Yeah, I use previous day's close for bias, and as well as the current day's formation, yes. Ami, if you take a look, most of my analysis is done the day, the prior to the session. And then I post after, if it works. So like if we go look at gold, that was the only one recently because I've been traveling a bit. We can go to gold here. So for me, the only bias was for gold. Go in here. Was when I wanted it to trade through this low, right? So initially I was saying, okay, we have Monday or Friday forming this. If Monday opens here, I'm bullish, right? That idea failed. So then if that's going to fail, this should fail. So then I'm bearish to this low. So then that's why on this day, I said I'm looking for this low. Right? Now we have expanded through this low, expanded back in. So now I'm bullish on gold. Which, wait, I'm off a day. Anyways, I would be bullish on gold yesterday, you know. But what happens, this is where we can talk about that invalidation or validation. We open up, we form a reversal on the previous day high, right? And then that's when it starts to fail. There's no bullish setup in here, right? So I think a few people traded this in here, the London setup. Would you prefer to true day open, midnight close? No, I don't. Well, you can use it as a support and resistance level. I just don't really use it, personally. All right, we're at 6%. So I'm going to end the OBS stream here, and then I'll continue the stream until my laptop dies. Or maybe we'll just go on my phone and I'll answer questions verbally.